Thank you for that, Kim. Good morning, everybody. So before I'm going to share my screen and share my slides, I just wanted to mention that I'm going to discuss three points I want to discuss. One of them is whether to start a business during a financial crisis is the right time or not, true or false. And then I want to talk a little bit about knowing our numbers, and then I want to talk about what and when and how. I think probably the best thing to do is that in between each subject, we'll probably give an opportunity for people to ask questions. Otherwise, it's going to be difficult to kind of answer at the end. Let me share my screen. How does that look? Do you see the slide nice and clear?
Perfect.
Perfect. Okay. So, does it make sense to start a business during a financial crisis, during a pandemic, during a recession? True or false? So again, like I said, I want to speak about three things. Point number one is start or not. Point number two, I want to speak about my numbers. And point number three, I'm talking about what, when, and how. Okay. Now, before we even start talking about whether we should start a business during a financial crisis or not, we probably want to talk about what is a financial crisis, what is a recession, in order for me to be able to explain whether I think it makes sense to start a business during a financial crisis or not. Now, as you see on the bottom of the slide over here, we see the red dot, this area, yeah. So a recession is a significant, widespread, and prolonged downturn in economic activity. A common rule of thumb is that 2 consecutive quarters of negative gross domestic product, as in GDP growth, mean a recession, although more complex formulas are also used. So what is GDP? Gross domestic product is the total monetary or market value of all the finished goods and services produced within a country's borders in a specific time period. So basically, if you have all the services and goods produced within a country's within the country within a certain period over 2 quarters, if they're going down, it's considered a recession. So if you look over here, you have 2 quarters, they're consecutively going down, that is called a recession. Now, the obvious question, well, it's not a question. This is based on research. This is based on the general market. Now, the general market includes many different industries and many different sectors, right? So it's quite possible, and I wouldn't, it's very likely actually, that there are certain sectors which are pushing down the GDP because those sectors are not doing well. Does that mean that every single sector across the board is not doing well? No, definitely not. I mean, we saw that even in the even during COVID, where there were, you know, obviously lots of businesses, specifically the high streets, etc., you know, were struggling. Other businesses, specifically online businesses, did really, really well. I mean, I'm not even going to start talking about PPE because that's kind of quite specific to COVID, but lots of industries were doing well. Now, so obviously the question then really is a financial crisis a time to start a business, true or false? I think the question has got nothing to do whether there's a financial crisis or not. If you have a good business idea and a good business model, okay, and the sector, and you could research which sectors are doing well, which sectors are not doing well. And if your sector has not been affected, and technically, as long as you have a good business, it shouldn't make a difference whether whether it is a financial crisis or not. If your sector has not been affected, I hope that's clear. Ultimately, you have to realize, and this is something I actually discussed with Kim as well before the session. You know, if you go to the big companies, and let's take Marks and Spencer, Tesco's, you know, John Lewis, you name it. Those companies are affected by the general by a recession, by the GDP. Why? Because they are targeting they're aiming for, was it 10 or 20 or 30% of the market. So if the general market isn't doing well, they're going to be affected by it. However, us as in small businesses, we're so tiny. We're only trying to target such a tiny percentage of the market, right? And the chances that that percentage is affected by it, is very, very small. So I personally, I don't think it should make a big difference. Obviously, you do have to bear in mind that there is a recession going on. You have to put some safeguarding in place. You have to do some extra homework, etc. But you could definitely start a business through the pandemic. I actually want to quote something that I read where it says, successful entrepreneurs don't sit down waiting for the financial graphs to grow. What are you going to do? You're going to wait it out, and how long is that going to take? Another good point is as well that a business that is started during a pandemic will most likely do even better afterwards if you have managed to survive the pandemic. Now, sorry about that. So the first question, does a recession affect me or not? I think we're too small to be affected by a recession. Does that mean we don't need to do any extra homework? Yes, we do. We need to check what sector is affected by it, and if your sector is affected by it, then obviously you might want to consider working, going to a different area. What are the pros and cons of starting a business or having a business during a recession? Now, before I even go there, I want to share with you a little bit about my own story. I've been doing bookkeeping as a side job, literally as a side job. I was working in education almost full time. I was looking for something that I was able to do an extra couple of hours a day. I tried various things. I was going to teach and tutor. I tried some businesses, but I came to the conclusion that in order for me to be able to focus on the education job, which was my main job, which I wanted to be in, I needed something that wouldn't completely take my head away, and something that I wouldn't have to completely be involved in. So I started doing some bookkeeping on the side. I started that about 14 years ago, and I was doing kind of 2 to 3 to 4 hours of bookkeeping a day, a total of roughly 20 hours a week, and that's what I did for roughly 10 years. A little bit before COVID, just about a year before that, I decided to, purely based on the demand. I was getting a lot of demand. I figured, there's only a limited amount of hours that I have available myself for bookkeeping. So I decided, I'm going to try and get some subcontractors in, and that way to build the business a little bit. And then that is what I was doing. Now then COVID hit. Now COVID meant that my business, the school where I was working at was closed for a couple of months. So I had a lot of spare time. I have a home office, so I had spare time to learn how to grow my business. Lots of areas to learn: how to price, how to market, how to brand, who to target, etc. Now, I think only because of COVID has my business been able to grow. So my business, basically, I used to be kind of a one-man band with kind of, some part-time subcontractors. Right now we're a team of 9 and providing bookkeeping services. I don't actually do much bookkeeping anymore, so I'm more kind of growing the company, managing the company, and has turned into a full-time job or a proper business, and it's actively growing. We're taking on new customers regularly. We work with some of the bigger accounting firms, specifically in the area, but we have customers actually across the country. Now that was only able to happen because of COVID. Why is that? Because until then, to be able to have a bookkeeper or an accountant that works remotely just wasn't the in thing. It wasn't acceptable. It wasn't what people did, and all of a sudden it became the in thing. Now, all of a sudden I was able to compete with the bigger companies. Why is that? Because the bigger companies weren't set up to be able to work remotely and to provide the service that I did. Something that I had been doing for a long time already. I was already working part-time for a lot of my clients. I used to go into the office every so often, but some of the work was done remotely. So I was able to take, because of what happened, because of the pandemic, I was able to grow my business, right? So you see, in theory, certain businesses or certain sectors or certain things that you do, you could actually grow during a financial crisis, because of the financial crisis, or during a pandemic, and even because of the pandemic. That's just something I want to mention about my story. Now, in terms of the pros and cons of starting during a recession, obviously, because of inflation, because of high interest rates, cash flow is going to be tight. And you have to appreciate, when it comes to the bigger companies, when it comes to a financial crisis or a recession, let's just take a company that employs a couple of hundred people. They have a lot of a bigger cushion that they could absorb to cut down on. If they employ 1,000 people, they can say, we're going to fire 300 people, we're left with 700, and that's how they could cut their costs and keep afloat. Whereas if you're a one-man band or a three-man band, right, what are you going to do? You're going to fire half your workforce. I mean, you got nothing left, especially if it's just you. So you have got a lot less maneuverability in order to be able to shrink. Whereas the bigger companies can, in a sense, they can stay afloat, not necessarily be profitable, but they can stay afloat in order to weather the storm. Whereas a lot of historically, the SMEs were the ones that suffered the most during a financial crisis, exactly because of that reason, because they just couldn't all of a sudden absorb all those additional costs. And the fact that it was a lot more difficult to get access to investors and to cash, and all of a sudden interest rates went up. Not necessarily because the business model didn't work, it's purely because they couldn't adjust to what was going on. However, the pros are, where do small companies have a strong point is, we're small. We could adjust, we could pivot, we could change direction. We're a lot more agile than the bigger companies. If you're I don't know, let's just say you sell pet food, you have a pet shop, a shop that sells pet food, right? So in the shop, you're expected to have a big range. You're expected to have a range of whatever it is, 100 or 50 or however many products you're expected to have. If you're only going to run 10 products, you won't be able to keep the shop open, because people are going to come to the shop once. They will see that you don't have the product, they're not going to come back. Whereas if you're a tiny business, or even selling online, you're making very, very clear what you're selling. You could say, you know what, I had 50 lines. There's only 20 of them are profitable. I'm going to drop 20 lines. I'm only going to keep on selling 20. The smaller companies can just change direction. They could start selling new products, whereas the bigger companies, is a lot more difficult for them to do that, and a lot more expensive, and it takes a lot more. Another benefit for small companies is remote working. For smaller companies is something that is a lot easier, because we're smaller. So to manage a team remotely is a lot easier. If you're a small company, just to give you an example, I was approached by a fairly large accounting firm a couple of months back. Talk about a company that employs about 150 accountants. A company not far from here. I'm based in Northwest London, and they wanted to meet. Okay, so what do you want to meet about? You want to talk about maybe to buy into us? I should buy into them? Or okay, I went for a meeting. So I come to this big building, a nice big building, lots of desks, most of them empty. I think it was about 5 or 10 people sitting in the office. Again, they employ 150 people. And then I went to sit with the director in the office, and I showed him my business model and my margins, etc. He was very impressed. And then he was like, what, I have an offer. I said, what's your offer? I said, can you please come to us and do this for us, right? So I said to him, I said, look at my numbers. I said, what are you able to offer me, right? And once we went through the numbers, we came to the conclusion that, first of all, he wasn't able to offer me or my staff whatever he was able to offer his staff at the moment, purely because they have such significant overheads that they didn't have the flexibility to just come up in price. So the smaller companies, in a sense, have the ability to hire better staff and to offer better rates and offer better terms, right, that a bit bigger companies do, which is a massive benefit. So I could retain and attract better staff purely because I'm based remotely, so I could get people from across the country. Plus, I could offer better salaries, purely because I don't have a big building of 4 or 5 floors meant for 150 people that I need to pay rent on, that I'm contract in for another 10 years or so.
Mendy, I have a question for you.
Go ahead.
It's not so for somebody thinking to start a new business anytime, but specifically in a financial crisis. What is the best way to determine whether I have a financially viable business before I even start?
So that really comes into the next section, which is knowing your numbers. And when I'm so talking about knowing your numbers, know your numbers means know your numbers before you start. Make a plan, right? Who are my customers? How much, realistically do I think I could sell, right? Create a best case scenario, create a worst case scenario, right? And based on that, you could start making some sort of a plan. You could do your homework. Is my sector affected? Does it make sense? You could discuss with other people. I'm a big fan of I have various businessmen, some more established, some less established, that I pass my whenever I have hesitations or issues, whatever, I will discuss it with them. Get advice from people that have the experience. That doesn't necessarily mean that you have to do exactly what everybody tells you, but it's very important to get different ideas from different people, because you'll get a lot of better understanding of what needs to be done. So if you know you're not based on your numbers, and once you start looking at your numbers, you start looking at where do these numbers come from, right? These are coming from these type of customers. Are these type of customers actually going to be buying right now? Well, what makes me think they will, and how likely will they, and what sort of money will they be spending? I would actually start, especially for smaller business, you might want to start at the end, which is at the end result. What is it that you're looking to achieve? How much do you want to take home, right? If you want to take home, whatever it is, £2,000 a month, for argument's sake, that's what you need. Build your business model on that. Obviously, if you're not financially dependent on the business, then it's different. But if you are, and you want to be financially dependent on it, you have to make that calculation. I want to be taking home £2,000. Yeah. Let's just say 6 months into the business. It's not necessarily realistic to expect it on day one, right? And then work it backwards. Once I know I want to take home £2,000, how do I think I could achieve that? And then build up on that. What are my profit margins? And how much is it going to cost me to target X amount of customers, right? In order to be able to generate X amount of turnover, in order to be able to be left with X amount of net profit, right? And that's really how I would work it. And I think that is an area where a lot of people, in a sense, mess up. I had somebody on reach out to me yesterday, and he was like, "Oh my gosh, what should I do? I'm going over the VAT threshold. Most of my customers are not VAT registered. That means I have to put my prices up by 20%. Yeah, they're not going to be happy about that, right?" So his business model was based on not being VAT registered. He had not taken that into account. And that's a massive mistake, was that's 20%, right? That's a lot of percentage that you all of a sudden you have to, and he tells me I'm going to have to absorb it. And I said to him, listen, I mean, first of all, I don't see why you need to absorb it. I mean, you could tell your customers that you have done quite well. You've gone, right now you're going over the threshold. You have to start charging them VAT. I said, besides for that, what is it, and then if you're running a business that isn't making money, how long are you going to be able to maintain that? So you have to make that decision. Ultimately, you're in a business to make money. And if you're not able to take home that bottom line that you need to be taking home, you don't have a business. I had somebody the other day, we had a discussion, and he was like, well, if I'm going to have to pay all that taxes, and if I'm going to do this and that and whatever, I won't be left with anything. So I said to this, I'm very sorry, if by the end, after you're paying your VAT and your taxes and everything else, you haven't got any money left, you have no business. So you really need to be working at the bottom line. You need to look at your net profit, right? Is the business profitable? Again, it's not going to be profitable on day one, right? But you need to have a plan. How long is it going to take me to become profitable, right? It's going to take me, 3 months, 6 months. Do I have enough money to be able to get there? So let's now talk. Does that answer the question, Kim?
Yes, yeah. Thank you.
Okay. Let's talk a little bit about your profit and loss in your balance sheet. Okay. Once once you start trading, you would want to be able to keep very careful track of whatever's going on, of your numbers, and compare those numbers to your budget, to whatever you had in mind before you even started, before the business plan, and keep an eye on it. You don't go too meshuggah, as they say, but keep an eye on it. You would be surprised at how many business owners don't actually know their numbers, and I have seen some people do really well not knowing their numbers, and maybe even because there's a famous joke that I always like sharing. It's actually quite funny. There was this kid that was in school, and his name was, by the way, I'm from Holland, so my jokes are often have to do with people on bicycles and stuff, but that's what I grew up with. So you had this kid, his name was Sam, and he was in school, and he was growing up. He just wasn't doing well in school, and his teacher, and this happened quite a few years ago. So his teacher tells him, Sam, all you're going to be able to do is when you become big, you'll just have to become a criminal, because you can't do anything. You can't add up, you can't spell. You'll just have to become, I don't know, a bank robber or something. Well, what are you going to do? A couple of years later, the teacher comes on his bicycle. Again, in Holland, all the teachers are going to school on bicycles, and he stops by a traffic light, and he sees this beautiful Mercedes pulling up, and he sees the electric windows rolling down. He sees Sam sitting there, and he goes, "Oh my gosh, Sam, how did you manage that? You buy yourself fancy cars and stuff. You're doing well in business, and how do you do that? You couldn't even add up anything in school." So Sam says to him, I'm in textiles, and I sell jumpers and stuff, and and I buy them for £30, and I sell them for £90. So I buy them for 30, I sell them for 90, and from that 3% I live, right? So sometimes people actually do well in business because they don't know their numbers, but again, I don't advise it. I think that's usually that might happen, but that's not what you don't have control over that. When you do know your numbers, you're able to keep proper track of it. I'll tell you an opposite story, which I was involved with recently. Was a company, a very established company. I'm talking about several £1 million turnover, company director for God knows how many years, and he wanted to sell the business, and he was offered a very good price for the business. Again, we're talking about multiple millions, and these people said, can we look at your numbers? And all of a sudden they started looking at their accounting software, and they were like, oh my gosh, none of your accounting software actually matches any of your submitted accounts. What's going on? So the moment this other company started doing the due diligence, again, because if you talk about bigger companies, they will do due diligence, right? And they lost out on this deal, millions of pounds, right? And now they're in a panic. They want me to help them to get their books sorted, which will cost them an arm and a leg, because we're talking about years worth of data that hasn't been recorded correctly. So knowing your numbers is not just about you knowing your numbers. If you ever want to get investment, you want to get finance, you want to, you need to know your numbers. Otherwise, you're not going to be able to get that investment. You're not going to be able to get that finance. So it's obviously for yourself as well, for your own peace of mind, or the opposite if it's bad, right? But it's don't underestimate what it means to an investor or potential investor when you have numbers and when you don't. I have a client who was supplying before COVID for years. He was supplying the event industry. Now imagine what happened. He was supplying the event industry, right? So this guy during COVID, he was finished. However, he had some investors in, because we kept on top of his books throughout. He was doing quite well before that, and throughout we kept, and we made a budget how we can survive the pandemic, and he was able to build on that, and we managed to just about stay afloat over the course of the pandemic. And after the pandemic, he's been doing a lot better, because he was able, because we planned really carefully, right? So very often knowing your numbers allows you to plan for good things, and allows you to plan for bad times. Now, what does knowing your numbers mean? So generally, when you have these days, you have accounting software, you have something like Xero. It's a cloud-based accounting software, which I highly recommend. You do have to know how to use it. It's not that complicated. It's very easy to use. It's also quite easy to mess up as well. If you're not that sure about it, ask the professionals how to do it, and perhaps it might be worth it employing somebody to do it. Depends on how capable you think you are and how much time you have for it, right? You have to understand your profit and loss, and you have to understand your balance sheet. Now, what is your profit and loss and what is your balance sheet? I actually had to explain this last week to somebody that turns over tens of millions of pounds a year. And I had to explain to him the difference between profit and loss and a balance sheet. And I thought it was actually quite hilarious that he didn't know. But a profit and loss is your daily or monthly or for whatever period you choose. It refers to how much you have sold, how much you have bought, and your overhead. So it's kind of my sales, cost of sales, as in how much it cost me to buy those items that I'm selling. Then I have my general overheads, my wages, my rent, my rates, utilities, etc. And so you have kind of a gross profit, which is your sales less your cost of sales. That's your gross profit. And then you have your net profit, which is kind of the net after your overheads as well. Now, so this guy actually asked me the question. I don't understand. The profit is showing that I have £300,000 profits. So where's the money? That's always the question I get all the time. I have £300,000 profit. Where's the money? Right? And I was like, well, the profit and loss is a theoretical profit. Right? It's a theoretical profit. Why is it theoretical? Because the report is based on the transactions that you have raised. It's based on the invoices that you have put on the system. It's based on the invoices you have received from suppliers. It's not based on the cash in the bank. This has got nothing to do with how much money you have in the bank. If I have raised £10,000 worth of invoices this month, then my profit and loss will show £10,000 worth of sales. Does that mean that I was actually paid £10,000? No way. I might only be paid next month, or I might have a customer that's going to go into liquidation. I will never get paid, right? So profit and loss is beautiful. It's very nice to run a high profit. A certain client comes to mind, and I could give you hundreds of examples, that he runs a beautiful profit, but his customers are terrible payers. So this guy's cash flow is killing him, right? Because he might have so again, do you want to have a business that makes a £500,000 profit, but the credit terms are 6 months or 12 months, whatever, and you never have cash in the bank, and therefore you're getting penalties and then you get in trouble and who knows what? Or would you rather just have £100,000 business and actually have the money, right? So that's a decision you'll have to make, right? So your profit and loss is your actual sales, right, less your expenses, but has got nothing to do with whether you actually paid those expenses. It's got nothing to do with whether you actually received the money for those sales. Now, what is your balance sheet? Your balance sheet tells you what your business is worth. Okay, your balance sheet tells you I have £5,000 in the bank, so I'm worth £5,000. However, I have £10,000 worth of creditors. I owe people £10,000, right? Which means really my business isn't actually worth £5,000. It's actually worth minus £5,000 because I've got more creditors than I have money in the bank. I owe more money than I have. However, then all of a sudden I have £10,000 or £20,000, whichever number you want to use, worth of customers that still owe me money. So all of a sudden I'm worth more money than I owe because I'm owed 20,000. I owe 10,000, right? So that's 10 plus I have 5 in the bank, so I'm worth 15,000. So your balance sheet tells you what your business is worth today. If somebody were to ask you, what's your business, what's your business worth? Well, my business is worth £10,000 in the bank. It's worth £50,000 worth of customers, less £20,000 worth of suppliers, etc. And then I have some other assets, and I have some furniture, and I have some vehicles, and I have a building, and etc. So your balance sheet shows you what your business is worth. However, your profit and loss tells you how business is actually going. So your balance sheet doesn't tell you how business is going because you might have a lot of money sitting on your balance sheet from 5 years ago that you haven't, right? So yes, your balance sheet might look very healthy. You might have £300,000 in the bank, but from when is that, right? So it could be you have been losing money for the last 5 years, let's just say £10,000 a year. So your business is actually not profitable, but because you had £300,000 or £330,000 in the bank 3 years ago, and you're losing £10,000 a year, so right, I have £300,000 in the bank. So you might think, oh, I got £300,000 in the bank, so I'm doing well. No, you're not doing well. You're actually losing money every year. Just happen to be you have £300,000 sitting there from 3 years ago, which might have been a loan or something, right? So really, in order to look at your business, you need to look at your profit and loss and your balance sheet at the same time. They need to work together, and really it's neither one will give you a full picture of the business. You're going, and that's what we call technically management accounts, running monthly or quarterly management accounts, which basically means looking at your profit and loss, looking at your balance sheet, make sense of them, and adjust according to where adjustments need to be made. There's often adjustments that need to be made in order for it to reflect the reality. Do we have any questions?
The questions that I have are probably you're going to cover, and if not, I will. I'll come back to them. So if anyone else has any questions, please put them in the chat, and I will put them to Mendy.
So if you do have a business already, or you haven't started a business yet, then you often have the question, should I be a sole trader? Should I be a limited company? Right, sole trader, limited company, VAT, thresholds. I'm not going to be able to go into too much detail, but in short, a sole trader means basically you're working for yourself, and you fill in a self-assessment every year to tell HMRC how much money you've made, and you pay taxes on that. It's almost similar to being employed. You just don't pay employers national insurance, but apart from that, you pay your regular income tax and PAYE, etc. A limited company is a completely different ballgame. A limited company is when you register the company as a separate legal entity where you could be a shareholder of or not, right? You could be director of it. By the way, shareholder is the owner, director is literally just the director. You're directing it, you don't own it, that's the director, right? And then now the advantage from a limited company is, in short, if the company wanted to go into liquidation, anything like that, it doesn't go into, it's not against you personally, so it doesn't make you personally bankrupt. It's not that simple. It does have an effect on you personally to some degree, but you're more protected than if you're a sole trader. However, generally the bigger companies are always going to go limited. In terms of VAT, and by the way, just for impressions wise, if you want to be targeting certain clients, you're going to look a lot more impressive if you're a limited company rather than if you're a sole trader, right? I would say the same thing about VAT. I get that question a lot. When should I register for VAT? When should I register for VAT? Are there different VAT schemes? Now, once you expect to be hitting once you have turned over more than £85,000 over the last 12 months, with the next month following that, you have to register for VAT. You do not have a choice. Okay. Now, and this is something to keep an eye on. Again, £85,000, we're talking about turnover, we're not talking about profit. Okay, please remember that. And people often get that wrong. And I have had people come to me 2 years after they realized that they actually went over the VAT threshold. And the problem with that is that the HMRC will require you to register retroactively, which means if you realize 2 years late that you were supposed to register for VAT and you didn't, you're going to have to pay VAT on all of the sales that you have done for the last 2 years. And you're going to struggle to go back to your customers and tell them from 2 years ago and tell them, by the way, I forgot to charge a VAT, right? And I should have. So basically what that means is you're going to have to absorb all of that VAT. Often for small companies, that means they have to shut the company down. It often pushes them into liquidation. So it's really something to keep an eye on. Keep an eye on your numbers. So as I said before, look at your numbers. Your numbers are good for you to know. It's good for your peace of mind. It's good for planning. It's good for investment. But it's also to keep an eye on your VAT threshold. Okay, really important, because once you hit that, it's beautiful. But if you hit it too late, it could knock you, literally. So you have an 85,000 threshold. Now, when it comes to VAT, there are various VAT schemes. Okay, now, myself, when I registered for VAT, I actually registered before I hit my threshold, and I did that because, first of all of my clients are actually VAT registered. So I deal with with the more established businesses. Typically, my clients are companies which have between £1 to £10 million turnover. So generally, they're all VAT registered, unless they're charities. But I don't deal much with charities. Which means the fact that I'm charging VAT doesn't matter to my clients because they claim it right back. Okay, the way VAT works is you pay VAT on your sales, you claim back the VAT that you're being charged on your purchases, and the difference between that, so if you charge £100 worth of VAT and you were charged £40 worth of VAT, you pay HMRC that £60. So the VAT doesn't actually cost you anything. Okay, so the VAT, so I registered for VAT. Why? Because I was dealing with the bigger companies. Now, if I'm dealing with the bigger companies, okay, what impression do I make when I'm not VAT registered? If I'm not VAT registered, I'm telling them that I'm turning over less than £85,000. What does that tell them about me? Okay, if I'm turning over less than £85,000, most people will assume that you're probably not that experienced. You might not even be that good, right? So therefore, I did it when I initially registered. I registered purely because I wanted to make a nice impression, right? Which is a reason to consider, something to consider. It's not a big deal. You have to do quarterly VAT returns. You can do monthly VAT returns. Now, in terms of VAT schemes, there is a scheme which is called a flat rate VAT scheme. Now, when I started on my business, that's what I went into. Flat rate basically means is that you charge your customers 20% VAT, right? But you're not allowed to claim back any VAT on your expenses. Now, for me, that worked really well because I don't have much VATable overheads. My overheads are mostly wages. Now, there's no VAT on wages, okay? Right. So if you don't have much VATable expenses, you might want to consider the flat rate VAT scheme, because that means you could charge your customers 20%. You don't claim any VAT on your expenses, which you probably don't have much anyways, or possibly, unless you're selling products, which is different, right? But in the service industry, that could really work. And then HMRC allows you to only pay them 13% of that, right? So basically, you get to keep a couple of percent. It's not big money. You talk about another maximum £5,000 a year or so. That's how much it ends up. And eventually they kick you out of the scheme. Once you reach a certain over 230,000, you have to leave the scheme. So to be honest, by now I've already left the scheme. I wasn't allowed to stay in the scheme because I've become too big for it. But for the smaller companies, it's something to consider. Another very important thing to consider when it comes to VAT is there's two methods of applying VAT. You could have VAT accruals or VAT cash accounting. VAT accruals accounting, VAT cash accounting. One of them is you pay your VAT based on how much invoices you have raised and how many invoices you have received. It's purely based on the invoice, regardless of whether the invoice was paid or not. Okay, so if I receive an invoice this month from a supplier for £100,000 plus VAT, I am allowed to claim £20,000 worth of VAT, even if I've never paid the guy, even if I'm only going to pay him next quarter or in 6 months' time. It doesn't matter. It's not relevant. VAT cash accounting means I pay the VAT based on when I get paid from my customers and based on when I pay my suppliers. Now, for cash flow purposes, that is a lot safer, because imagine you've done a lot of sales this quarter and you have done some purchases, right? And generally, your sales are going to be higher than your purchases. So in a business that's making money, so you'll be paying VAT. However, if the customer hasn't paid you, that means you're paying the VAT to HMRC, but the customer hasn't paid you yet. So you're out of pocket. Okay, with VAT cash accounting, you will never have that problem. So again, for the smaller business, for the newer business, you might want to consider that. Once you go over 1.25, I think it's 1.25 or something like that million, you're not allowed to stay in the VAT cash scheme anymore. So you have to leave the scheme. So these are schemes which are geared towards small businesses. There are various other schemes out there as well. I'm not going to go through all of them, but just a few points that I think was important for the smaller businesses. Now, when do I need to register? You know, people often ask me, it doesn't matter when I register. Do I need to a new company? Or new companies don't have fixed tax years. Okay, unlike when you're a sole trader is like your personal income. You have a tax year which runs from April to April, from April to the end of March. And actually from the 6th of April to the 5th, till the 4th. Sorry, from the 6th till the 5th. From the 6th of April is the new tax year, to the 5th of April was the last day of the tax year. That's how it works for personal taxes, and that's how it works for sole traders. When it comes to limited companies, you decide what your financial year is. Whenever the company opened up, right? Let's say open up in April. So that means if I open up the company in April, that means that March is going to be my financial year end. Okay, 12 months after you started the business. Okay, now, what are my responsibilities? In short, 9 months after year end, you have to submit your taxes, your tax computation to Companies House. You have Companies House, you have HMRC, two separate things. I'm not going to explain why that is separately, it takes too much time. But so you have, once the company's opened up, you have another 12 months for the financial year to end, and then you have an additional 9 months till you have to actually start submitting your taxes. Don't wait till you hit those 9 months, because then you start getting penalties for non-submission. And by the way, after 9 months, that's when you have to pay your taxes as well. And if you don't, they start accumulating interest. We spoke about corporation tax. Just a brief mention about, I have till 11:20, don't I?
We do, yes, but I'd love to allow a couple of minutes of questions. Okay,
let's just talk about, so I mentioned financial year, and I mentioned year ends. There's a mention briefly about PAYE. If you want to register for PAYE, so basically you have something which is called payroll, you have something which is called dividend. So a lot of company owners, you could choose how you want to get paid. Do you want to get paid on PAYE, or do you want to get paid via dividends? In short, every person has an allowance of £12,500 where you do not pay taxes on, right? So most company directors will kind of get £12,500 on payroll, and then if you get paid via dividends, you only pay 7% on income tax on dividends received up to a certain amount. But for the smaller companies, it's 7%. There's a massive misconception out there. You have to remember, dividends is not considered a company expense. So if I pay myself a £50,000 wage, and let's just say the company made a £60,000 profit, and I pay myself a £50,000 wage, that means the company only made £10,000 profit. So I'm paying corporation tax, company tax, only on £10,000. If the company made a £60,000 profit, and I pay myself £50,000 dividends, that means the company is still considered like it made a £60,000 profit, and you will pay the taxes on the £60,000. So a lot of people think if I get dividends, I only pay 7% income tax, right? And therefore I should always pay dividend and only dividend, and etc. I even had somebody on the phone this week that was angry, and he should have gotten dividend, would have saved him £20,000. I said, yes, it would have saved you £20,000 on income tax, but it would have cost you £20,000 or £19,500 extra on corporation tax. So dividends, there is about 2 or 3% benefit on getting paid by dividend, but it's not as exciting as it seems. Okay. Let me just finish off quickly with some top tips, which I think are really important to mention. War chest, okay? War chest. Keep money aside for bad times. Don't have that, because you will hit those times when things are not doing well, where that customer that you were expecting was going to pay is not going to end up paying. Keep something on the side. Cash is king, yeah? And make sure you have a plan. Make sure you have good credit control systems in place. Make sure your customers are paying you on time. Some people focus a lot on selling. It's beautiful, right? I have customers that sell a lot, but the customers don't pay. It doesn't help, because ultimately you'll get in trouble if they don't pay. So you can have a massive business. Don't focus too much on selling if the customers aren't paying. So slow down on your selling and get better paying customers. Now, something important as well, it's not all about the logo. People, when they start businesses, they're very focused, and I was that as well, by the way, on the logo and on the branding and on the website. Yes, you need logo and you need branding, you need a website, but don't get too hung up on it. Okay. Ultimately, it's about, and that's what my next point. People buy from people, and there's a few points on that, right? If you get out there and people like you, they'll do business with you, regardless of whether you have a nice website or whether you have a nice logo or not. Yes, you need to be out there, you need to be seen. People need to get to know who you are and where you are. They need to know where to find you, okay? But don't get too hung up on it. Don't spend too much time and too much money on those things. All that effort could be better used on actually trying to sell. Am I still here?
We've lost your...
You've lost me?
Your presentation. Well, so...
Yeah,
is it a good time for a question, or have I stopped you mid-flow?
No. So one more thing. I'm still with you. I'm not. One thing. So people buy from people. You have to remember something. People buy from people, right? That's the most important thing. What I've seen in my business. make sure people get to know you. Put yourself out there. Use social media. Use LinkedIn. And don't always use LinkedIn just to sell. Because people only buy from people they know. People like, a lot of people come to me because I've posted a funny picture or a nice story about my child or about a nice trip. And that's what people remember. People, when I start posting about cash flow forecast and management of accounts, a lot of people won't read it. They will remember me about a funny picture, about an interesting story, right? So that's a lot more important than a logo and the marketing or anything like that. Remember, people buy from people, and if they like you, they will come back to you, and they won't question you so much on the price either because they trust you. Okay.
Wonderful. Thank you, Mendy. I have a question for you. What do you have any tips for chasing invoices and making sure your clients pay on time?
My biggest tip, all of my clients, without exception, are on direct debit, monthly fixed fees on direct debit. Nobody owes me money. And if they do, they get told, not a problem, you can't afford it, it's fine, find yourself somebody else that's willing to work for you and do it for free. But that's one tip. But there's a lot of, with automation, if you use something like Xero, there's a lot of stuff that you could do that integrates with Xero. Whether it's you have to give them the option when you send out invoices, make sure you give them the options. Make sure there is a link on the invoice where they can pay directly on the link. People forget about things, so a lot of people want to pay, they just, you haven't given them, you haven't made it easy enough for them. Make it easier for people to pay, right? You have to have a link on the invoices that you send out automatically. They can just click on, scan the credit card, and there's lots of facilities out there that offer that, specifically companies like Blink, right? I highly recommend they have these options. It's really simple, it doesn't cost much, and it saves you a lot of aggravation and headache.
Brilliant. Thank you. And I have one more question. I think we've got time for one more, which is, when is it the right time to employ the services of a bookkeeper, and how can it help me in my business?
Okay, so that often depends on how comfortable you are yourself to do it, how much time you have yourself to do it. Some people are excellent businessmen, are terrible at bookkeeping. Some people are both. Some people are good at bookkeeping, good at business, but they don't have the time to do both. So it really depends on your circumstances. If you think you're on top of it, if you really feel that you're on top of your numbers, then I think, you know what, learn slowly. Try it yourself. There's lots of tutorials available on YouTube, and even in Xero themselves, they have like a program where they teach you a lot of the things. If you can manage yourself, do it yourself. You save yourself a bit of money. However, when you do get a bookkeeper and they're any good, they generally tend to save you a lot of aggravation and headache. That's really, so it's not so much. And again, if you're a small company, you're talking about what, another £100 to £200 a month or so. So you need to think yourself, is it worth it, my time? Quite often bookkeeping, people is kind of, they do it late in the evening when they're already tired, etc. So that's which is really why they end up making mistakes. So is it really worth it doing myself or not? So it really depends on your circumstances.
Thank you so much. Thank you. I think you will all join me in saying that was really useful and helpful, insightful, Mendy. Thank you so much. Just to let everybody know, we now have a 10-minute break at 11:30. On this same Zoom link, we've got a session called 250,000 and Beyond, Get Your Business Fit for Growth. On the other Zoom link that you will have in your email, the session is called Mindset and Motivation. Do you have what it takes to set up and run a business? So do stay on here for the Getting Fit for Growth, or on the other one for do you have what it takes to set up and run a business? So once again, thank you so much, Mendy, for this excellent presentation. We all appreciate it. And we'll see everyone in 10 minutes. Thank you, everyone.
Thank you all. Bye-bye.
Feel free to stay on the Zoom and just switch your camera and microphone off if you want to stick for the next session.